The Banking Association of South Africa says the COVID-19 loan guarantee scheme has provided almost 50 billion rand in financial relief to businesses that are in distress, and this since August. Under the scheme, the Reserve Bank, National Treasury and commercial banks have agreed to guarantee about 100 billion in loans for businesses facing financial distress due to the COVID-19 pandemic. By September, we're told, around 11,000 businesses and individuals were approved for loans amounting to just over 16 billion rand. However, almost a third of those who applied, actually didn't even meet the criteria and were disqualified. For more on this, let's bring in Bongiwe Kunene, who's Managing Director of the Banking Association of South Africa, to explain to us how this all works. Bongiwe, thanks very much for your time. Welcome to the AM report on Newzroom Afrika. I'm more interested as a start to understand a bit more about this figure of a third of the applicants who actually didn't meet the criteria and were therefore disqualified. Give us some of the reasons why some of these people weren't meeting the criteria.
Okay, thank you very much. So the criteria, first and foremost, was set together by the banks with National Treasury and the Reserve Bank on getting this loan guarantee money. So some of the applicants did not meet that criteria. That criteria is really, first and foremost, it starts by being unable to repay, but also for using the funds for not meeting the conditions for which the funds should have been used. A case in point here is that the business must have been affected by COVID. So if the business is in distress, but it was not affected by COVID, that's one of the reasons why it would not get the loan funds. But there's also an understanding implicitly in all of this that the applicants must be able to repay the loans, and the requested amounts must be to the tune that they would be able to pay. Because among the reasons why they've been declined is that the repayment would be unaffordable in the future, or the requested amount is too high versus the business, what the business can support. And maybe lastly, it could be that the applicant does not have a good record of repaying their debts.
You speak about an implicit understanding. I think one would have to look quite far and wide to find a business that hasn't been affected by COVID-19, at least at this stage. Is that particular criteria, do you think, still relevant considering where we are?
When the banks give out loans, there is the expectation that it's going to be repaid. So in this case, you would find that businesses are still able to service their loans, those that have been qualified, and the most that have been affected, the issues that the banks have been concerned about, it's their ability to repay and their ability to pay their employees and to keep the operations of an entity going.
Okay. When we finally get a loan granted and it's not necessarily paid back, whose liability does that become? Because I understand this loan guarantee scheme is actually in collaboration between commercial banks, the state through National Treasury, and the Banking Association of South Africa. So in the event that a business, for whatever reason, can no longer pay back, whose liability does that debt end up becoming?
Well, the first start is that the applications, everyone who gets the application, who gets the flow of funds from the banks will repay those. In the event that they are unable to pay, the first recourse would be the banks will pay out of the administrative fee that they have paid to National Treasury. If the amount is still more than what that administration fee can cover, then the banks will go take the whole portfolio of the loans that have been lent in this manner to the Reserve Bank, where there will be an audit whether the banks did not lend recklessly. After that audit, they still have to be paying out of the 6% that is their liability. If all of that fails, then there would be recourse to the guarantee that is underwritten by the state. So it takes about 3 stages before there can be recourse to the state.
And Bongiwe, are you able to share with us the profile of the people applying for these loan guarantees, so to speak? I mean, are these major conglomerates, at least the companies, or is it, sort of institutions and entities that are still struggling out and are therefore likely to be really vulnerable to the economic fallout of COVID-19?
The majority of the companies that have been successful in applying for these loans fall into the band between 1 and 20 million rands in terms of turnover.
Wow, okay.
So they are quite small companies.
Right, right. And are we able to track how sustainable these loans are for these companies? In other words, are the loans, at least from your reading of the situation, providing the relief that's needed to not only keep the companies afloat, but to ensure that they're able to keep going for as much as we can predict, depending on how long COVID-19 will be around?
Yes. In the assessment for the loans, the banks have been taking really good care to make sure that these are sustainable ventures. But I have to hasten to add that the entrepreneurs who are applying, they themselves are also very concerned that the business is sustainable. And there is very, very few who would want to take a loan knowing that their business is not sustainable. What confounds the situation is the business operating conditions. So if the entrepreneurs are not sure that they are going to be repaid by their clients, that is something that concerns them greatly. And one of the big defaulters in this case, when they are supposed to be paid and are not paid in time, we have been told it is the government itself.
And Bongiwe, help us understand the different conditionalities between these loans and a loan that a company would apply for without a global health crisis like COVID-19, for instance. I mean, what are some of the salient differences between the relief that's been granted through this scheme versus, again, a loan that would be granted in any other circumstance?
Okay, so in this scheme, let me explain from the way in which it is designed. It has dispersed by the 29th of September, it had dispersed 16.08 billion rands. That has gone to the companies that wanted to boost their business. Either it's a restart of the business because it's been affected by COVID, or it is the continuation of operations. Ordinarily, the companies would apply for anything. They would apply to change their business model. They would apply to get their operations maybe supported in a different way. Others would have ownership, which includes shareholders. They would be using those funds for shareholder value. But in this case, they have been specifically asked, concentrate first on making sure that your limits are very well understood. So there is a cap. Not a single company can borrow more than 100 million rands. That is the first cap. The second one is in the manner in which this money will be repaid. Ordinarily, an entrepreneur can apply. When they've been approved, they got all the funds. In this case, the funds are dispersed over a 6-month period. After that 6 months drawdown has happened, they have another 6 months not paying. They only start paying at month 13.
All right.
So you can
I'm going to have to come in there. Terribly sorry to cut you there, but we're woefully out of time. Hopefully, your explanation has been well captured by those who have a particular interest in trying to get this relief. I'm going to have to thank you at least there for now. Bongiwe Kunene is with the Banking Association of South Africa. In fact, she's the managing director there. Once again, really appreciate your time.